Hello traders, Gary Wagner here. It is 12:16 in Honolulu and 6:16 in New York on Friday. Happy Aloha Friday, as we say on the islands. It is the 19th day of August, 2022, and this is the daily report for gold and silver, our weekend review. To say that it was a tough week for gold is an absolute understatement. We have seen 5 consecutive days of lower pricing, characterized by 4 lower lows, 4 lower highs, and 4 lower closes. Gold this week gave up about $56 in value, a little over 3%. Currently, the most active December contract is at $1,760.30 after today's $10.90 decline. Silver is also continuing to trade under pressure, giving up about 2.5%. And after factoring in approximately a 49-cent price decline, the September contract is currently fixed at $18.96.5. Lastly, this week it was all about dollar strength. You can see that on this chart right here to the right. We'll discuss that in detail when we pull up some charts. But suffice it to say that the dollar today gained about 0.6%, is currently fixed at 108.005. And in terms of its gain this week, it gained 3.86%. Traders, while we all have an intrinsic understanding that price changes in gold are affected by 2 major forces, market participants actively buying or selling, in other words, normal trading, and dollar strength or weakness. This week, gold declined for 5 consecutive trading days. It actually moved to a point where it lost $56 in value during the week. That's about 3.08% in terms of its weekly drawdown. But what is interesting is that type of drawdown is not all that rare. We're looking at this week's candle here, and we don't have to go back very far in time to find an even stronger weekly drawdown. In fact, we can just go through this chart and very quickly ascertain, and I might be off on a couple of them, but you have numerous amounts of days in which you saw significant declines in gold that were larger than the percentage decline this week. Nonetheless, gold dropped $56, and that is significant. However, when compared to the dollar's gain, we'll see that that is a different story. We are looking at a weekly chart of the dollar index. We can see it's a very large green candle in terms of the gain. That is this green candle here representing the week. It gained 2.21%. That's significant. However, and I have looked at candle sizes, I went through this chart, to have a day in which it had a larger drawdown, you've actually got to go back to the first quarter of 2020, and it is this large green candle that resulted in a gain of almost 5%. We can go through, and even the large candles don't come quite close to it. They're shy of it. A gain of 2.21% is extremely significant because it's not typical in the dollar to move that much in a single week. The other thing that we can consider when we look at this is that gold, in terms of its decline, was 3.08%. The gain in the dollar was 2.21%, which means the differential between them is the direct result of market participants selling into the market. It only takes simple math to calculate the percentage drawdown directly attributable to market participants actively selling. It is 1.65%. You simply take the drawdown in gold, which was 3.86%, the advance in the dollar, 2.21%, which means that 1.65% of the 3.8% decline in gold is attributable to traders taking gold prices lower. This week, we have been looking at different technical studies, whether they're moving average or math-based or pattern identification, to give us some insight as to what gold will do over the next couple of weeks. We identified a cup and handle pattern that didn't pan out because the handle basically went straight down. That negates it. I think the most accurate, simple technical study we did was a support trend line that we put in simply based upon a series of higher lows, these two lows here, and once it broke below this, it became a resistance line rather than a support, went down to the low of 1680, and you can see it went right to the top of this line before selling off further. That tells us that this is a very strong indication of current resistance. Our premium subscribers that watch each daily video Monday through Friday realize that we have been trying to position ourselves from the long side, and we're looking for what we believe is the best price point to initiate that trade. The low today that came in gold occurred at $1,759 and change. We've been talking about trying to enter within this gap. Of course, it's an artificial gap because it was created when August, the most active contract month, ended and the new month became December. So it created this price void. And we were looking to buy somewhere right within that area. And if we look at the action today, it's clear to see that we're right in the middle of that. But we have had a change of heart, so to speak, and we have a slightly defined and refined strategy as to where we feel it is best to enter the market. We will talk about that on Monday for our premium subscribers and go into detail where we are looking to get in at and where we are looking to place our stops. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you on Monday for the next daily update and review. Bye-bye.